right, here I am back. I think that I forgot to hit a button, so technical difficulties for you all that may have joined in. I don't think that I recorded anything, so here I am back to you. Again, my name is Josh Ruiz on behalf of Senior Market Advocates sponsoring this segment. We're coming to you for the Facebook group we have, empowering veterans 55 plus to maximize their VA benefits and insurance in retirement alongside their family members, okay? On today's live broadcast, I'm bringing you some pros and cons and information regarding hospital and supplemental insurance benefits in conjunction to whatever primary medical plan that you may have, okay? So starting out, I want to talk about hospital supplemental plans, hospital indemnity plans, what that means, what it does for you, okay? So a supplemental plan is something that you buy that's in conjunction to your primary medical. Typically, these plans are known or referred to as what's called an indemnity. And what that basically means is it has a specified defined benefit structure that can either pay you directly as the consumer or pay the provider, okay? Now, I have a couple examples that I'm going to share with you in how these plans have benefited, clients in the past and why they make sense for many people, okay? My first example is actually my uncle. He went to the hospital thinking that he was having a heart attack. Fortunately, he was not. It was just some bad indigestion. But the long and short of it is they spent 2 days doing numerous tests on him to find out that his heart was in actually really good working order. And then, in fact, the cardiologist told him, your heart is so strong, I don't ever anticipate seeing you in my office or having to see you again related to a heart issue. He's not on blood pressure. He's in good health, good BMI, all that is in great. So the point of that is that he was in the hospital for 2 days. His primary medical plan had a $5,000 deductible, which he was subject to before the plan would pay 100%. Okay. Now he has a supplemental plan that pays a specified amount. In this case, his benefit was $5,000 for any hospitalization. Now, let me define what hospitalization is. Hospitalization is somebody that is, one, admitted to the hospital, and two, staying there at least 24 hours or greater. Okay. That's the terminology for being hospitalized, is 24 hours or greater and being admitted, okay? Now, with him being admitted to the hospital, we were able to claim against his supplemental policy, which wrote him a check for $5,000, okay? Now, I know that may not seem like a lot, but in this case, with him being subject to his deductible of $5,000, he was able to recuperate that $5,000 loss that he had with paying his deductible, leaving him zero out of pocket in his case, okay? Now, this is not, not every situation is going to zero you out. My point in this is that it can truly, truly make a big difference in the event that you have to meet your deductible, right? And if somebody doesn't have those funds, or you don't have access to funds, having a supplemental policy like this can really make a big difference for you, okay? Now, I want to illustrate the cost of this policy for him, and it was a total of 3 family members on it. It was roughly about $80 a month, which is about $1,000 in premium a year, right? Now, it paid him out $5,000. So you're saying, Josh, well, he's up $4,000. Exactly. He was up $4,000. So was that $80 well spent? Absolutely. Okay. So my next example I want to give is on an injury case. Okay. I have another client, specifically self-employed client. He's a truck driver. He was finishing up his load. They just loaded his trailer. He was up there checking, make sure everything's secure. When he stepped off the back of the trailer, he tweaked his back pretty severe, okay? Again, he went to the hospital. They ran a slew of tests. They did some therapy. He had some medications. At the end of the day, his bill was over $10,000. Now, his responsibility with his plan liability and his primary medical plan was a deductible of $2,500. Again, this client had a supplemental plan of $2,500 for any accident or injury, okay? We were able to take his claims that he had and get him reimbursed that $2,500, which covered his deductible out of pocket, which left him out of pocket $0, okay? And that's where the value of these plans really come in, is being able to shield yourself from that out of pocket expense, right? Now, if you have a platinum plan that is zero, zero premium, zero deductible, and just gives you everything, obviously, you may not be a good candidate. But if you have a policy that has some risk associated in the form of higher deductibles, then you would be an ideal candidate for one of these policies. Okay. So again, as I said, paying cash benefit to you as the policyholder. Okay. Another reason, it's an alternative to a savings account, right? A lot of us, and I speak for the masses in this, don't think about, hey, maybe I should put away, $80, $100 each month to be able to stockpile, a health savings account, quote unquote, on my own, right? Well, think about how much time would it take you to accumulate five, ten, $15,000 versus paying a monthly premium for a policy. And that's where the difference kind of comes in, right? Because I get that a lot. Clients will tell me, oh, well, I'll just put money into a savings account. Okay, well, that's fine. But what happens if you start doing that today, and in 2 months from now, you're out biking, and a car cuts in front of you, and you hit the ditch and break your leg, and now you're in the hospital, and your deductible's $5,000, right? Well, you've only paid into your savings account 2 months. You don't have $5,000 to offset your out of pocket, do you? So that's where these plans really come into play and can really benefit you in that case, right? So again, I was saying, covering the out of pocket of your primary plan. Maybe that injury results in a surgery, right? Maybe the benefit oversees your out of pocket cost. Some of these plans have what we call a daily expenditure, where they'll pay out a daily amount for however many days you're hospitalized. And in one of those cases, we've seen clients come out not only covering their out of pocket, but also coming out ahead. Now, I don't want to misinterpret and say that this is like a disability policy, but in some cases, it can pay you in excess funds that could be like a disability policy, where you're out of work, maybe a week or 2 weeks, and now you have cash funds that can relieve some of the stress, that you don't have to go back to work right away. You can focus on recovery and healing, and then get back to what you're doing. Okay. Number one, the last thing I want to kind of touch on with this is preventing one from having to scramble, right? As I was just mentioning, the worst thing is having some sort of illness or injury come up and not knowing where the funds are going to come from, right? And again, that's where supplemental plans can come into play and give you that security, that peace of mind, knowing, hey, I've got the supplemental plan. It's going to pay out. It's going to offset my out of pocket. I'm good to go, right? And as I was mentioning, I had previously just been doing this live, but I forgot to hit the button. So I'm kind of trying to restate my pitch that I just had. And I was saying that, unfortunately, I'm not the president or any politician, nor am I going to be. But I think it's super bizarre. And I think we have to realize that, the medical industry is one of the most, it's bizarre in the fact that it's one of the only things that we can get service and not know what to expect cost-wise, right? We've all been conditioned to know, though, if you go to the hospital, it's thousands, right? That's pretty much a guarantee. There is no shortage of you walking into an emergency room and not expecting a bill of $1,000 or greater. It's just not likely to happen, right? And again, that's where having a supplemental plan in place can really protect and shield you from that, okay? Now, the last thing I want to kind of touch on is understanding your risk tolerance, right? Maybe you're somebody that likes to pay more premium on a monthly basis so that you can alleviate having out-of-pocket costs at the use, right? I always say insurance is a true balance of how much do you want to pay monthly in comparison to how much that you want to pay to utilize it, right? And in order to pay less monthly, you're going to take a higher risk load to use it. And again, that's where you can come in with one of these supplemental plans and back that higher risk load and still keep your premium down, because you're taking a higher deductible. And supplemental plans, like I said, I mean, in the example of my uncle, $80 a month, that's $1,000 a year. It's minimal in the big picture of having access to funds when something happens, right? At the end of the day, accidents and illnesses are unexpected, right? Nobody can plan to break their leg. Right? At least I don't know anybody that can, right? And nobody's going to plan, to have a major illness, right? We all go through life, as healthy and as proactive as we can, but things do happen. And this is where having something in place can protect you, right? I've got a little quick quote here from Brian Tracy, and he says that planning is bringing the future into the present so that you can do something about it now. Okay. Now, let me say that again. Planning is bringing the future into the present so that you can do something about it now. Now, what does that mean? It means just what it says, right? That by planning and having proper coverage, you are preparing yourself for future incidents that could happen and that you could have to experience out-of-pocket cost, right? Now, I want to encourage you all, insurance is something that should be regularly reviewed, at a minimum every year, okay? Even if you're on employer coverage or, you've got VA benefits or whatever the case may be, you always want to review because, again, it's about the risk, right? It's all about the risk tolerance and your life changes, right? I say insurance is about evolving with the individual, right? Our needs change, our budgets may change. So it's about reviewing that periodically so that you have the proper insurance, you have the proper coverage, you have the proper peace of mind, and most importantly, you feel secure about what is protecting you, your family, your loved ones, and your assets, right? So that's what I have today on hospital supplement and supplemental plans. Hopefully this is giving you some insight and some value. Please be sure to leave some comments for me. If you have some questions, do that as well. Give me a thumbs up, a like, a angry face, whatever you guys want. I just want something. Give me some reaction, right? Whether it's good, bad, or indifferent, I'm okay with that. I just want something. If you can give me something, I greatly appreciate that. Check us out. We're going to be live every Thursday at 4:30. I know I'm past 4:30 on this one. I had some technical difficulties on the 4:30 broadcast. So hopefully this one is right. And again, check us out. joshruiz.com is where you can find my information. We've got the Facebook group. Send me a message if you're not in the group. Happy to bring you into the group. And let me know what questions you have. Let me know how we can help you. And stay tuned. Next week, I've got my man coming up Ted is going to talk about home and auto policies, the gaps, the misunderstandings, and inform you on how to be properly protected with your homeowner and your auto insurance. Okay. On behalf of Senior Market Advocates and myself, Josh Ruiz, thank you so much for tuning into the broadcast. And I hope you all make it a great day. And remember, life is priceless. Insurance is affordable. We just have to show you how. Thanks a lot.